Well, welcome. It is Friday afternoon, and Melissa and I decided to get face to face because we are both hearing a lot of talk about buyers and sellers just wanting to wait until after the presidential election. I cannot believe we're already here, but let's talk about what the election really means to buying and selling a home and the lending side. I mean, you
Yeah,
are really in there in the weeds, so let's talk about that.
no, absolutely, absolutely. And it's interesting. So, on the rate front, there isn't really a discernible correlation between an election and who wins and what happens to interest rates because it really ultimately, mostly, is based on just the economy. The economy is doing well, rates are going to stay higher. The economy is doing poorly, like 2008, rates went way down, but it wasn't because of who got elected, it was
Mhm.
because of what the mess we were trying to dig ourselves out of that
Right.
was created by largely the mortgage
in in
industry. But
in reality, life just goes
yeah,
on. We know that. We
exactly.
understand that. So,
Exactly. However,
mhm.
there is a very clear correlation to home prices the year after an election prior and compared to the year of the election.
Okay.
In every example since 92 to now, to the most recent
So
election,
that's 32
yep,
years. Okay.
there has been an increase and a fairly significant increase, with one exception, 2008, which that year was special.
So
um,
the home value has increased.
increased.
So
Yes.
right after the election. So what that means is if a buyer's sitting on the sidelines before the election, pull the trigger now
Yep.
because you're going to be paying more for a home
Yes.
after the election than you would before.
Yeah.
Number one, that's what I just heard you
Yep.
say. Number two is we don't know what the interest rates are going to be.
No.
We have no idea.
No.
Interest rates may go higher, they may go lower.
But whatever causes that is going to be an economic cause, not a political cause.
Correct. Okay.
And I don't even think the home prices going up is political. I think it just is people are nervous before the election. They hold off on buying. Less buyers are out there competing, which means the people that are buying are getting better deals. And then after the election happens, regardless of who wins, everyone's like, it's over.
It's done.
Like,
Yes.
we can go on with our
Yeah.
lives.
And I think the election over the last 30 years, right, has gotten so many more eyes on it simply because of social media, simply
Yeah.
because of media outlets finding things to scare us about.
Yes.
We all know how that has worked over the last few years. So that's probably why the last 32 years have been significant
Mm-hmm. Yeah.
because that's when cameras came, videos.
Right.
People are
Right.
recording everything.
And then some people are waiting to see who wins because each candidate has their own policy or proposed policy for what they're going to do if they win.
Good point. So let's talk about that a little bit. So one of the candidates is talking about giving first-time home buyers a good little chunk of down payment assistance.
Yes.
Well, so let's talk about what we already have in place here in Texas.
Yeah. So for that plan to go through, it would take I mean, there's a lot that has to happen for a $25,000 home buyer tax credit to go into effect. And when it, or if it does ever go into effect, there would be a lot of red tape.
Because
A
Congress,
lot.
everybody has to approve it, right?
Yes.
Yeah.
Yeah.
Okay.
Just a ton of red tape. Now, one thing I heard yesterday, someone was saying that they had heard there was a provision that no family member could have ever, or no parent or grandparent could have ever owned a home. I do not think that's true. Another person we were talking to said she'd read the entire thing and it is not in there, and it would be impossible to enforce. So I think that's a myth that we should probably just
Good.
nix.
'Cause
But
that'd be crazy.
yeah, that would be crazy. But let's say it goes through. Lots of red tape. So I think it's really good to look at what can we do right now.
Correct.
And people can get $25,000 to buy a new home today. I have someone closing today actually who is getting more than $25,000. Now she's using one of the Texas down payment assistance programs, and there are programs in every state.
Yep.
They're largely based on what your home price is going to be, but you can get between 2 and 5% of the loan amount. And in the case of my buyer closing today, that is more than $25,000.
I got a couple of buyers into homes and using the down payment assistance program here in Texas. And one of them had to bring $34 to closing. $34.
Yeah.
And that was a 5% down payment assistance program. Um, and it covered her down payment. It covered all of her closing costs except for $34.
I believe it. No, and there are ways to buy a home today, and the longer people wait, hoping some program might come into existence, the higher home prices are going to be and the more expensive it's going to be to buy. And another concern with that program is if it's too easy to qualify for, it's going to flood the market with buyers, which means we end up back up in a multiple offer situation. So even if it exists, it might be a market environment that, because it exists, is harder to actually qualify for a home.
Okay, so
or not qualify to actually buy the home because of how many people you're competing with.
It makes total sense. So let's talk about qualifications for the Texas down payment assistance programs. And it's not just that. You have other programs. We have other programs, but let's, in general, I know from the realtor side, I understand that it depends on how much you make.
Yeah.
So you have to make under
sometimes
100,000. Okay.
No.
Okay. No.
So under the standard TSHAC program, the Texas State Affordable Housing Corporation program, that the income limits for Dallas County, at least, it is county specific.
Right.
So, but Dallas County is 137 roughly. It's maybe exact a little above or below, but my client closing today makes 135,000, and that was a little just slightly below the max.
So that's gone up significantly over the last couple of years.
Yeah.
Good. I mean,
it
cost
has.
of living has gone up. So.
Exactly. And then if someone doesn't qualify for that, then there are other programs that don't have income limits. So I've got someone else that went under contract yesterday who has a 611 credit score and makes more than that.
Amazing.
Yeah.
Just amazing to me. Okay, so the other couple other things that is for qualification, my understanding, you're here to correct me. The house has to be under a certain value.
Not necessarily. No,
See?
That was also lifted. Now there are other programs that have more restrictions. It will not be my go-to program, just because if we could go the path of least resistance, where we're at least less likely to have challenges down the line, we're going to go with that. But yeah, so it depends on the product. But there are some that have absolutely no limits.
And so the other thing that a lot of people believe is credit score.
Yeah.
That you have to have a high credit score to buy a home.
Not totally true. So like I said, the client that I got under contract yesterday has a 611 score, and she is buying with an FHA 0 down loan. Now you have to get an automated approval. Actually, I think you can do manual underwrite on that, but it's not everybody with a 611 score is going to get approved. Not everyone with a 620 score, which is the minimum for the TSHAC program, is going to get approved. It does depend on the overall credit file, but I think I wouldn't let the credit score worry you, because there is flexibility there. And even if the score is not where it needs to be today, we can look at, hey, how do we get you where you need to be?
Got it. There's so many dependencies, right? So the very best thing you can do is reach out to a good lender like Melissa at Guild Mortgage to talk you through it, and to, look at your file, look at your credit, and look at all of the different things to figure out what you may or may not qualify for.
Yeah, and I think it's super tempting sometimes for people who are worried about whether they'll qualify or not to just go to an online lender, do the online application. It feels very like no one's going to judge me. Well, you're going to get either a yes or a no.
Because what I have found is that
not now, but
yeah,
here's how we get you there.
Right. What I have found is that if you just say, hey, do I qualify? Most lenders will say yes or no.
Yeah.
But if you sit down with a good lender, they will say, okay, you're not quite there yet, but here's what you need to do. Or you don't qualify for the typical loan, but we have this over here that you absolutely qualify for.
Yes.
So waiting for the election to see if a $25,000 first-time home buyer assistance program will be implemented across the United States, you don't need to do that, number one. So number two, let's talk about what else is happening.
Just in terms of rates.
Yeah. Let's talk about rates.
We have to. Okay, do we have to talk about rates?
Yeah, we do. I mean, people
Yeah.
are waiting for rates to drop. We've been waiting. We really thought rates would be in the low fives by now.
Yes.
Those people that were forecasting it were completely wrong.
They were completely wrong.
No, we did
Yeah.
tickle the fives
We
over the
did.
last few weeks,
We
but
did.
this week,
Okay, so this is that like double-edged sword. We've had too much good economic data released this week, which means the economy is doing well, relatively speaking. Um, just based on the numbers, I know it doesn't feel like that, but based on the numbers, the economy is doing well, and that means there's no reason for the Federal Reserve to drop interest rates. So I think the estimate right now is like 24% that they'll even do a cut in November.
mm-hmm.
If we keep getting the data that we're getting, that looks less and less likely.
Mm-hmm.
Maybe in December if things change, but if we go on this trajectory, it just doesn't look super.
And again, our if the Feds if the news was different, we would start baking in the mortgage interest rate cuts before the Feds meet in November. The Fed fund interest rate drop does not directly correlate with mortgage rate drops.
Correct. And we really saw this in October. So the mortgage rates dropped ahead of the federal funds rate.
Mm-hmm.
And literally the day that they announced the half a point cut, which was the best case scenario, mortgage rates went up, and they have gone up steadily since then. Now and part of it was just the communication from the Federal Reserve members about we've cut the rates, but overall the economy looks pretty strong. We have to keep watching the jobs numbers. And then we keep getting these jobs numbers that are ridiculous, very good, maybe somewhat questionable, but very good.
Yeah.
And that just the odds of that next rate cut keep dropping, and mortgage rates are back up to the 6.6 range for a conventional loan, and above 6 for an FHA loan again, FHA VA. So it's not where we want it, but again, rate is something that you can change.
Right.
You buy the house, you get in, you lock in the price. You can always refinance the rate when it makes sense to do so.
And I'm going to put a plug in here. Everything that we're seeing from the Feds, we really do have a stable economy.
Yes.
We have a good economy.
Yes.
What the inflation part of everything, the cost of goods, we're catching up from COVID, where we had a couple of years there where it was impossible to get stuff for a long time.
Yes.
Yeah. So we're playing catch up right now. And that's why our going to McDonald's costs $20 for one meal versus cooking at home costs $25 for one meal. So I just wanted to put that plug in there.
We absolutely 100%. And the Fed even said on the inflation front, we are on track to hit that 2% target. Like we're going to get there. But 2% inflation still means that prices are going up 2% per year.
Yeah.
So that's why it still doesn't feel good, because they went up like 9% for a year and then 4% for a year, and now we're down to 2%.
Yeah.
So they're still going up, and that it's still painful.
Yeah, it is, but way better than 9%.
Way better. Yes.
I will have Melissa's contact information below in the comments. Feel free to reach out to her anytime. She's a great resource and also a great lender. But get with somebody who can help you and can qualify you before you just assume that you don't qualify.
Yep. I think that's fantastic advice.
Okay. Again, I'm Dawn Lawrence with eXp Realty, Elevated Realty Group, and Melissa Condenza,
Guild Mortgage.
Yeah. And if you have any other questions, feel free to comment below. I will respond, and if I don't know, I'll get somebody who does know. And if you want more information like this, subscribe to my channel and ring the bell. Just all you have to do is tap on the little bell. You will get notified before anybody else does. Have a great day.